Hello and welcome to another accounting tutorial where in this session we'll be taking a deep dive into the Receivables Ledger Control account. Now this account has really been on a name journey over the years. You may see it referred to in other videos or articles as debtors, sales ledger control account and trade receivables, or as we now know it, the Receivables Ledger Control account. So, by the end of this video, you should be able to answer the following questions. What is the Receivables Ledger Control account? What is it used for? And how do we prepare the account? Let's start from the top then. What is the Receivables Ledger Control account? Well, this account shows how much money a business is owed by its credit customers. So for most businesses who sell to other businesses rather than the general public, they will sell goods on credit rather than an immediate payment. Your Receivables Ledger Control account is there to show the total amount still owed to the business from these customers. It's classified as a current asset, which means that we should expect for the money to be received or used within the next 12 months. Next then, what is it used for? Now, although we've touched on what it's used for already, it's also important to note some other uses for the account. The balance on this account will be used to prepare the business's financial statements, both on a monthly basis and at the year end. And this will show managers at a glance how much is owed to the business in the short term from its customers. The balance on the account will change on a regular basis, and every time an invoice is issued to a customer, this will increase the balance on the account. And once payment has been received, this will reduce the balance on the account, as the money would no longer be owed. Another use for this account is as a control mechanism for the business. The Receivables Ledger Control account should reflect the total amount owed on each individual customer account were the business to add them all together. If all the customer account balances added together didn't equal the balance on the Receivables Ledger Control account, then there must be an error somewhere in the records. Now, the all-important how do we prepare the account? Well, the transactions that are going to be recorded in the account are credit sales, sales returns, any discounts allowed, irrecoverable debt, and any receipts where the customer has paid. Now remember that we said earlier this account is an asset and therefore we would always expect there to be an overall debit balance. With that in mind then, we know that this account is an asset, so any of the above transactions that are going to increase the account value, i.e. increase the amount of money owed to the business, will be a debit. And any transaction which reduces the amount owed is going to reduce the value on the account and therefore be a credit. Let's have a look at an example to put this into practice. You've been given the following transactions and have been asked to prepare the Receivables Ledger Control account and enter the balance carried down at the end of the month. The balance brought down is 47,900, credit sales 27,965, sales returns 1,422, discounts allowed 190, irrecoverable debt 2,400 and receipts from customers 37,891. Let's first draw up our T account and then work through each of the transactions. We'll start with the balance brought down from the previous month, and this will always be entered on the debit side of the account. This shows the amount owed from customers at the beginning of the month. The credit sales would then be entered on the debit side of the account, as this would further increase the amount owed to the business. Sales returns would reduce the amount owed to the business and therefore be a credit to the account. Discounts allowed would also reduce the amount owed to the business, as they're allowing the customer a discount on the sale for paying quicker. This is also referred to as a prompt payment discount and will be entered therefore on the credit side of the account. Irrecoverable debts are where the business has made the definitive decision that the money will not be received by the customer, due to reasons such as the customer going into liquidation. This again will reduce the amount of money owed to the business and therefore be entered in on the credit side of the account. Lastly, receipts from customers. Well, this would definitely reduce the amount of money owed to the business and therefore be entered in on the credit side. The final step would be to balance off the account at the end of the month and enter this in as the balance carried down. To do this, we add up our debit entries, which come to 75,865. We then add up the credit entries, which come to 41,903. Find the difference between the two sides, which is 33,962. Now we can enter this in as our balance carried down on the lower side, which in this case will be the credit side of the account. Remember, this will be your opening balance, i.e. the balance brought down, at the start of the next month. And that wraps up my guide on the Receivables Ledger Control account. I hope you found it useful, and if you have, remember to hit that like button and subscribe to the channel for more AAT content. Thanks again for watching. I'll catch you in the next one.